Welcome to Homebuyer University. I'm Steph Douglass, broker and CEO of Open House Austin. I bought my first house when I was 24 as a first-year teacher. I felt completely overwhelmed and like I was drowning in jargon that I didn't understand. That's why I decided to take my background in education and apply it to homeownership. At Open House Austin, we're here to make home buying inclusive, approachable, and actually doable, even if you're a first-time buyer. Whether you're buying solo, with a partner, or as an investor, we'll break down everything you need to know to make you feel confident in your journey. In this video, we're starting with one of the most important things to understand, your mortgage and how to get one. Buying a home doesn't mean you need $400,000 in your bank account. Shocking, I know. I thought the same thing when I was in my 20s. What you do need is a mortgage lender, and that's exactly what we're going to break down today. Let's keep it real. Most people don't buy a house with all cash. What they get is a loan called a mortgage, and that mortgage comes from a lender. It could be a bank, private mortgage company, or a credit union. They're fronting you up to 97% of the price of the home, but they're not doing this out of the kindness of their hearts. They need to know you can pay it back. That's where your financial story comes into play. Lenders are basically financial detectives. They're looking at your income, your credit history, your debt, and your savings. And yes, they're going to ask for receipts, literally. Bank statements, pay stubs, tax returns, etc. Now, I get it. Most of us don't even want to tell our family this information. It feels invasive. But here's the truth. They're not judging you. They're assessing their risk. They've seen everything. You are not going to shock them. Think of your lender as a financial strategy partner. Even if you're not ready, your lender will help you make a plan. They'll tell you what to fix, what to pay down, and when to come back. After talking to your realtor, the first step in your home buying process is to get pre-approved with the lender. Your realtor will send you a short list of their favorite lenders that fit your specific needs, and you'll choose the best fit. That's why this week's homework is key. First, you'll gather your financial documents. Then you'll start to understand your own monthly numbers so that you can have a baseline of what you want to pay every month. Then you'll start to prepare for a real conversation with a lender. You actually might be closer than you think. In the next video of Homebuyer University, we're going to get into the 3 variables lenders care about the most: your income, your credit score, and your debt to income ratio. Because getting a mortgage isn't about being perfect, it's about knowing how to play the game. I know it seems like there's a lot to learn, but don't worry. Our goal is to make this information easily digestible so that you feel confident moving forward in your home buying journey. I'll see you in the next video.